Hi, Andrew Unknown here, mortgage agent with Rock Capital Investments. This is the third in a video series that I'm doing focusing on the major aspects of the mortgage financing industry, both for realtors to send to their own clients and as well for, just everyday people looking maybe for your own mortgage or if you're looking to get into the mortgage agent industry here in Ontario, Canada as well. This episode is going to be focusing on choosing a lender and the different types of lenders that are out there. Now, there are three main different types of lenders and financial institutions that we, as mortgage agents, have access to and work with regularly. The first is what we call your banks and your credit unions, and then we have, alternative lenders. We have two types of alternative lenders. We have, different we have you have your private side, which is a private corporation that or individual that does work with mortgages and is lending out the money. And then you also have other financial institutions that aren't one of the big Schedule 1, Schedule 2, or Schedule Schedule 3 banks that we work with, but they are what we call on the alternative or the B side in terms of lending. Now, if you're looking for a lender for either for your client or for yourself, which lender should you go with? Well, obviously that depends a whole lot on the specific situation that you're in. But, you know, people will think, "Oh, it's always better to go on the A side if you can." Well, not always the case. If you can, typically yes, the A side, what we call the A side, or the Scheduled One banks and credit unions as well, is typically like the better place to be. But even temporarily, it might be a good idea for you to explore the B side, and don't be afraid of the alternative or B side. If there's and that's the best part about my job is why I enjoy doing so much. Enjoy so much of what I do is working with people who think, oh well, I went to a bank and I wasn't able to get a mortgage. Well, there's typically a solution out there that might be able to work for you, depending on the situation. Now, if you have, for example, if you're looking for a, a, a deal that might require some extended ratios in terms of your debt servicing ratios, like we talked about last week in last week's video, then maybe the B side might be perfect for you because there are several of them that do have what we call extended ratio programs that can give you a little bit of access to a little bit more money, even if your other debts are a little bit higher than what is typically accepted by the by the by the A side. So again, that is one benefit that there is to the B side. The other thing is they do accept. There are solutions for people who have, slightly bruised credit. Now, well, it's never a good idea to have bruised credit, and your rate is certainly affected on the B side. In some cases, for sure, your rates can be affected, especially depending on your credit history as well. There might be an option out there, even if you had, you don't have a perfect, 800 or 900 credit score. It can be there can be deals out there that are possible. If you have other debts, for example, you have student loans, or you have, any consistent loan payments, like you're repaying any sort of debt that has a standard monthly payment, or you have a decent amount of credit card debt. Like I said, there are programs out there that may fit with what you're looking for. So it's always a good idea to talk to an agent and see if there's something out there that might be able to work for you. That is the number one thing. The number one benefit of working with a broker or agent like myself is that we do have access to those options that not everybody thinks about all the time, right? Everyone in especially in Ontario, in Canada where I am, they know what the banks are. You know what the big five banks are, and you know that what they do pretty much. But you may not have heard of all of the different lenders that I have access to that might have a program that fits perfectly for what your client or you as the client need. So that's why choosing a lender is such a unique process for every single deal that comes across my desk, and each file is entirely different. Even if you think they're the same, they're really not. Even if they're, even if you're a a salaried employee, and it's you and your spouse and you're both salaried employees, and well, you have minimal debts and everything, there might be some differences depending on which program we go with. And it's also, what are you looking for, right? The number one thing that I will ask the clients that I see, and that I deal with on a daily basis is, okay, what's the number one most important thing to you when choosing a lender? Is it how much money you qualify for, or is it your rate, or is it are you looking for like a HELOC program? Is it a refinance? Is it whatever the type of deal is? But the number one question I ask is, okay, what's the most important thing that you're looking for? Because there might be lenders that have more significant programs that allow you to qualify for more money, but the rates are slightly higher. Or you might qualify for less money, but your rates are lower, so therefore your payments might be lower. So if you're not as concerned about your payments being a little bit higher, but you want to qualify for a higher ceiling in terms of money, or you want, you need more money to do whatever it is that you're looking for. For example, especially if it's a new purchase on a home, if the home is a little bit more, for example, if the home value is say 600,000 and you need, between 450 and $550,000 for a mortgage, let's just say, or 500 and I guess it would be 530,000, because that's what you'd need for a down payment, roughly. You would need, are you looking for, you need more money, but your payments are going to be higher, so you're okay with that? Or are you looking for, okay, I need the lowest rate possible? A lot of people tell me, oh, they're looking for the lowest rate possible. And that is not always the best option for you, because depending on what the situation is, there might be a program that fits with what you need, that has different options that are perfect for what you need. The other thing that different lenders offer is different prepayment and repayment options. For example, if you're looking for if you're a commission-based employee, right, and your commissions are relatively consistent, but they vary in size, it might be beneficial to have a program that allows you to have full prepayment and full repayment options. For example, a fully open mortgage or a partially open mortgage that allows you to pay off either the whole mortgage in full or significant portions of the mortgage at any time. For example, if you're a commission-based employee and you have a month where you bring in, say $50,000 to $60,000 in commissions, and you want to put 20,000 of that towards your mortgage payment, well, there might be other programs that offer, might be some lenders that offer a program that allows you to do that, whereas other programs may not, right? So again, that's one of the benefits of talking to an agent, is finding something like that works best for you. My job is to find the solution that works best for you or your clients. So that's what we are here to do. We're here to work for you and work with you to find the best solutions possible for your situation. Now, I hope I've done a good job of explaining the difference between the lenders and the benefits of talking to an agent or broker about which lender we have access to, rather than simply, even if you technically qualified with one of the banks. Obviously, they offer fantastic products. They offer amazing products, and it's amazing to work with them. But it's always beneficial to talk to a broker, even if it's just a short conversation before you walk into the bank and you apply for a mortgage, because there are things that you may not know you have access to, that you qualify for, that you might qualify for if you talk to one of us, and they may not be things that you're aware of before going into one of those meetings as well. And it's always good to have somebody on your side to advocate for you and help you along through the process, which is what we do. Now, again, I hope I've done a good job of explaining everything. If you have any questions, if you're a realtor who I've sent this to, please feel free to email me. And if you're watching this on YouTube, please feel free to comment on the video, and I will respond to the comments as quickly as I possibly can. Thank you very much for watching. If you're watching this on YouTube, please like and subscribe for weekly mortgage content. And if you're interested, follow on Instagram at @a_unknown mortgages and on Facebook as well. Thank you very much. Bye for now.